Thank you. So, good afternoon now. Yes, so good afternoon, everybody, and a very warm welcome to all those present on the call. I gather we have over 100 participants. So, along with me, I'm Manoj Koladkar, the MP, and along with me, I have Rishi, who is our CFO, and Nilesh Jain, who's our company secretary. So, we all are joining, and I'm in a way glad to share that we are joining from the office desk. So our office is, our plant is open the last week in a small way. I'll do that later. So I hope you all have had time to go through the results presentation which are posted on the stock exchange. As you may have seen, we have reformatted the presentation, tried to incorporate points that you all have been raising and try to make it more informative. Hope it is helpful. And before I begin, so first and foremost, I hope all of you and your loved ones are safe and very healthy. These are really extraordinary times, which I'm sure none of us dreamt. I think the last I only know is we saw that movie Contagion. I'm sure all of you must have seen that, and it was a science fiction movie. That was all about, but never thought that science fiction would turn into reality so soon. It's really unprecedented times. So it's only, what really only wise of us to take all the precautions as mandated by the government, as we are, learning so many sources, and stay safe and stay at home. So I'll just share upon, how the industry is reacting to this and how really has taken precautions on this particular front as I go along in the presentation. Coming to the auto industry, we have seen it couldn't have come at a worse time. I mean, COVID crisis, we have seen that, right from Q3 of 18-19, the September quarter of, that time onwards, things in auto industry are peaking down, and actually we have, not really recovered from it all. Month on month, been a steady decline. And to top it all, now we have this really challenging times for the entire auto industry. There are several reasons like huge vehicle demand, transition from, the big transition from BS4 to BS6, security crunch, lack of clarity on policies of electric vehicles, statements being made about, 18 vehicles becoming obsolete or whatever. So change of axle load norms, which we saw in affected big time the commercial vehicle industry. So we had change in insurance in November 18, if I remember, in dampened two-wheeler demand because that caused a steep hike in prices. All these mix of all these and overall consumer sentiment, I think, really puts all on the auto industry. Now with this COVID-19 pandemic outbreak, this hit almost all the countries in the world. In fact, there's no country that is left now. It has resulted in several disruptions of, factory operations, labor issues, concern health, safety management, shop floor, and of course supply chain disruptions as well. The only that we will have to accept this new normal. We have to learn to live with this situation of COVID-19 by ensuring that all our employees, their families, all the stakeholders are completely safe. The company, Gabriel, has been working on re-engineering its business model to normal policy, like working with lesser people, basically reducing the density of people. Physical distancing. The term social distancing is being used, but I think that's not a very right term. We are actually, in these times, we have to be socially as close as possible, while physically being as distant as possible. In terms of 6 feet. And so we are looking at practice, ensuring that everybody stays healthy, and taking all actions to basically look at how can we, ensure distancing by reducing density, by putting some barricades, putting some partitions, and of course with regulatory wearing of masks, etc. Back to state, like we had also uploaded and shared with the stock exchange, all our plants started operations, resumed operations in the last week. But many have, almost all of them have started invoicing in a very small way. Production is yet to pick up, but yes, at least week by week we are seeing, I must say, a small increase in dispatches in terms of our thing. Now coming to presentation, I would request all of you to refer to the presentation, slide number 3, where we are trying to first address the key issue, which is staring at all of us, which is COVID-19. So what are the key actions for prevention and resuming operations post-lockdown? So even during the lockdown, which started on 3rd March, if I remember, what we did was we had formed a task force to address key issues plant at company level and even at Anand Group level. We were monitoring it right at the top level, on a daily basis. So what we ensured was that the people use time of lockdown productively. We stay connected, we stay engaged, we stay motivated. We in fact all of our plants engage. I'm sure engage even with the families during this time, because obviously we'll have to look at the mindset as well. Did that very successfully. We had regular reviews, and we used Microsoft Teams as our platform, and we discovered that we can do so much work on this Microsoft Teams, as I'm sure all of you must have heard. And we maximized time that we had during this COVID-19 lockdown. We ensured that all our employees, staff, in fact, right from me, right down to all the operators, we did a lot of learning programs, e-learning programs, training programs, skill building programs, formally through the online platform. That was really very well done, I must say. Now coming to the slide. Coming to this slide, this is a slide from what we decided at the Anand Group level, because this crisis had to be dealt at the highest level. So we, right from our group CEO and the executive committee, of which even I am a part of, defined escalation levels. We formed crisis management teams. We defined standards. We defined protocols. Not only for plants, but also for our aftermarket, for our guest houses, for our hostels. As you know, we have many of our employees, the young operating engineers, staying in hostels. We ensure that even the hostels are sanitized regularly, disinfected, distancing norms maintained, and we supported all of them right through the crisis. We continue to do so. And we also tied up with local hospitals just in case there is any need. So, we have done a whole lot of that activity, and I'm glad to share that we so far we have not had a single case not only in Gabriel but there Anand Group. Going to the second slide, now since the lockdown started, opening up partially, we also defined a protocol for start of operations. This you can see in this slide. We addressed in different aspects, right from people, infrastructure, process, and quality. All the manufacturing shop floors had to be shut down at practically a night's notice. So we had to ensure that quality is maintained. Most important for all of us. We did have people, just 2 or 3, I must say, in each plant, so that they ensured that the equipment is maintained, run, and it's nothing. We won't have any startup issues. We deployed these practices at our tier 2, tier 3, where we addressed. We had a vendor again online, where over 170 of our vendors joined, where I shared the complete plan and also tried to sensitize them on the importance of all these precautions. That was done very well. We shared all the practices with them so that they learn from it and tried to whatever we could. Even from customer point of view, we're in continuous touch, regular touch, absolutely. In fact, glad to say that with some customers, we actually helped our customers come up with guidelines for the entire vendor fraternity. Took lead in all of those forums, and we were asked to share the best practices to everybody. And lastly, in terms of preserving cash, because this is most important. We are a debt-free companies. We did try to ensure that we continue focusing on cash, the receivables part solely. And yes, we are continuously doing exercises to reduce even the share once we go along. The next slide is, again, a very detailed, not to eat, but you can see the depth of, the calls. We have not missed a single aspect. This is just to ensure that, we have no slips. And as you know, our group philosophy is business is 90% people. So we want to ensure the safety of all our, that is first and foremost. Moving on to the next slide, again, in terms of what we did with customers, what we did with suppliers, again, very, very detailed instructions, so leaving nothing to chance. That's what we did. And again, glad to share that all of our employees did implement this in a very wonderful way. And so we are having, I must say, as minimum problems as we could think of. Moving on to the next slide, in terms of finance functions, again, we could finish our closing. We complete all our audits. We had our board meeting again. First time we did our board meeting on the Teams platform, which went very smoothly. So, whole host of efforts we have done during this time. Here are some pictures in this slide. I hope he is able to see the slide. The pictures, I've just shown sample plants. We have, as you know, we have 7 major plants. But Hosur, which is the biggest plant in terms of two-wheelers, you can see right from transport, the entrance, when the employee enters the gate, the shop floor, canteen, sanitizing, hard disinfection, and how we have used simple partitions in the canteen area, that no employee while eating is in contact with another employee. The washrooms, the hostel isolation room, actually designed in the hostel again. If there's a need, if you move to the next slide, that is for Chapan, which is where we are right now. Again, the alternate seat bus, marking on the areas, again the same. Still, as you can see, in each area, right from the employee starts from the house, being brought to the company, and employee leaves, we are ensured that he leaves nothing to chance. So this is, quickly on precautions that we have taken for COVID-19. Moving on to the next slide. Which is, basically on the results. So if you can come to, we will share on last year's performance. Slide number 13. Slide number 13. The financial highlights for the quarter 4 of FY20. We had, probably the lowest revenue in terms of quarters, which was 4 crores. EBITDA at 7.8% of 50 crores, and PAT at over 6.3%, at 26.6 crores. If you see the comparable figures, which is on the boxes below, the revenue in Q3 FY20, which is was 455 crores, and the EBITDA was for that quarter was 7.1%. So on a lower scale for this quarter of 424 crores, able to improve that to 7.8. Even if it's the comparable quarter for last year, which is 2019, the EBITDA was 6.7 on 510 crores sales. We have been, as I had shared, that we had kicked off the aggressive cost reduction and cost containment measures from especially the month of August, and it takes time. I had shared in the last call also. So those fruits we are now able to see in terms of the results. Moving on to slide 14. This again for the full year, we did a revenue of 1,807 crores. We were well on target to do a reasonably good sale. But the last 10 days of March, as you know, the sale was zero. We lost that sale. And if you see in terms of year on year, we are down to almost EBITDA for the full year is 7.5%. That is 4.5%. But the part is as regards the balance sheet, the net cash position is 133 crores almost, and we capped 56 crores. In terms of cash flow from operations, generated almost 150 crores as compared to 93 crores in FY19. So even focus on cash flow continues. We have ensured that we don't take our eyes off the ball in terms of cash at any point of time. Declared a final dividend of 5. Total dividend for the year is 1.3. This, of course, as you all know, we have to keep in mind really challenging situation we are in. So, despite that, we have a dividend of 1.3. In terms of slide 15, again, just shows the financial track record for quarter, which we just, but this makes it a bit more clear as to comparison with the previous year. Net worth has gone up from 590 to 62 crores, and cash flow from operations, which I already mentioned, has improved from 90 to 120 crores. So strengthen the net worth, maintain high liquidity, and improve the working capital efficiency. This has largely been done on account of the severe cost or the cost reduction measures that we took and the focus on cash flow. Moving on to slide 16, which is the profit and loss statement. Again, I've discussed the key figures already. So we are open to any suggestions or any inputs or any queries that you have regarding this. One thing that definitely improved and was a key factor of the improvement in EBITDA was raw material part. We have improved over 2% in this aspect. So this is a mix of course, the value engineering exercises that we did, the cost reduction exercises that we did through measures, and of course commodity downturn, which also plays a part in this. Moving on to slide 17, this is the quarterly performance trend. As you can see, it's been till 18-19 where we crossed the milestone of 2,000 crores, and we had really thought that we continue, but as I mentioned right to start, the auto industry with really very, very dampened times for over a year, actually practically more than 5 quarters now. So this year we ended at 1870 crores. Format of margins and ROC is there for you to see. Moving on to the next slide, graphical formats added so that we get a perspective over what has been the trend from over the past many years. This is what is shown on slide 15. Key ratios on slide number 19, as you can see here. So fixed asset turnover, despite this low sale, we are still able to be above 5. And in the period, I already mentioned, the payout is still 2%, which is same for the year. Keep in mind the challenging situation that we are in. The revenue mix, in terms of segment, as you can see here, in terms of commercial vehicles, it is 13%. 12%, which came down from 10%. Passenger cars from before it came down to 2%, and those two-wheelers did better. As you can again, you must have seen I heard that we actually gathered some results from two-wheelers,
car, we had lost out on some model earlier, which and some model, basically Maruti van, discontinued. So this had an impact on our share going down in terms of our total sales. Channel mix, clearly FY20 there was an improvement in terms of aftermarket. From 11% we have grown to 15%. Yes, we continue to have a challenge on exports. But yes, I mean, again, we have got some breakthroughs in exports, which is starting in the month of somewhere in the month of August, September. In terms of segment-wise, which is what we have added now, segment-wise performance. Two-wheelers, 68% of sales. Our market share is 100% now. The new programs, they won from TVS Motors and Bajaj Auto both. In addition to, of course, Suzuki motorcycles, we are also well entrenched with electric vehicles. So Okinawa, Ather, TVS, Hero Electric, and also three-wheelers like Bajaj, M&M, and TI. Our top customers remain TVS Motors, Yamaha, and Bajaj Auto. Here we can see that growth was driven by efforts in improving market share. So we did have good efforts on improving market share, which resulted in present market growth for us in terms of two-wheelers. Forward to passenger vehicles, I already shared the reasons why we lost market share. We had action. The first step is yes, Espresso, Maruti Espresso, which is 100% with us. That started doing well, but then yes, COVID happened. But however, we expect this to do well going forward. As you know, the car ownership in basic car segment is likely. That's also our thought. See how it pans out. We have many new platforms with Mahindra. We have new platforms. In fact, SOP of one of which started in this quarter. Volkswagen, we have two new platforms. Volkswagen Skoda. PS, which has deferred its launch date, but yes, we have won that as well. And with Tata Motors also, we have one more platform. Top key customers here are the Suzuki, Volkswagen, and Mahindra. Coming to commercial vehicles, where our market share is in excess of 75%. Because we have been hit by the overall slump in the CV industry. Otherwise, we are very well engaged with all the customers. We have won new platforms from Switzerland, the new modular platform, as well as Force Motors, the new Traveler, which they showed, which is very good and has features. Here our top customers are Tata Motors, Mahindra, and Leyland. Aftermarket, we continue to have the leadership. We continue to see that our brand is well nourished, well trained, and continues to have the same recall by doing focused branding exercises as well as influential retailers, dealers at every front, and mechanics as a large community. In terms of the aftermarket sale, shocks and struts, which is the core business, is 82%. The others, which are mainly traded parts, which is right from tires to wheel rims, they form 18%. So the sales in terms of aftermarket, if you see the AGR is at 9%. Even last year, in a very, very challenging year, because we do supply to aftermarket to several of our group companies, and I can tell you for sure that Gabriel has really done very well in this segment by having a very marginal compared to the industry. Exports, which I mentioned, we had a significant fall in terms of percentage from 4% to 2%. It was for a variety of reasons. But forward, again, we are trying to see how we can leverage the relationships we have with global OEMs in India, which has already resulted in one order of Volkswagen Russia, which will be starting in Q3 of this year. We continue to try to focus on overseas markets by testing each and every won an order for Isuzu, which you already are aware, but the volumes unfortunately are low. New export orders, which I mentioned, is DAF Netherlands, the commercial vehicle order. DAF is among the leading truck manufacturers and a premium truck manufacturer in Europe. The SOP for which will start in the month of August this year, in a couple of months from now. And Volkswagen Russia, I already did mention that we have won that order, and in fact we have got the volume was originally indicated, so this augurs well for our future export. In terms of currency, I mean the exposure we have basically highlighted here. The import content is only 50%, and our key focus this year has been from this year onwards to reduce imports to get to a value as close to zero as possible. Especially where we are importing a lot from China. We have developed alternate sources in all the key commodities, and we have done a very robust plan to ensure that we hopefully some situation where we will procure through the minimum is based on competitive advantage of quality and cost. So this is a key focus here for all of us. I'll hand it over to Rishi for balance sheet details. This is on slide 27.
Good afternoon. Key highlights balance sheet is the cash and cash equivalent balance, which is 152 crores at the end of March 20. Increase in balance largely was owing to the release of working capital, even though by the end of the year we had an increase in the NWC in the short months. We managed to reduce our debtors as well as to some extent the inventory, which has helped us in generating out of cash. So even though our profit was lower compared to previous years, currently we've been able to get a higher cash from operation. As far as CapEx is concerned, the current year we've in around 56 odd crores, and this is large on account of the Saran plant that we set up and tech being set up at Chakan, as well as the expansion in plant, which is mainly support the Saran facility. In terms of cash flows, I've already explained that regards to cash flow operations as compared to FY19, which is at 120 crores in FY20. The cash flow activities, the 96 crores largely going to, as well as the increase in the deposits balances we have, and the financing activities largely towards the dividend. As you see in the last graph in itself, we've had a reduction from 51 days to 40 days, which has helped us in generating cash.
Okay, so from here onwards, from slide 9 onwards, we have come to the company corporate overview, where we have tried to highlight several aspects of our company, right from our product profile, etc., which of course all of you have gone through. So again, we have any questions you would have on this as well going forward. We have also highlighted the space car initiatives, which is a very, very key initiative which we have been doing at the company and at Anand Group level for over decades now. That continues to be a key focus area for all of us. We have also highlighted the HR principles of the group during this presentation, and in the strategy going ahead, which starts from slide 43, is what right to price in financial worthiness, customer focus, aftermarket, and technology and innovation. These are of course four key aspects of our growth strategy. And in terms of strengthening of focus areas, which is on slide 45, clearly defined that we want to be amongst top 5 shock manufacturers in the world by 2025. Yes, this is a vision we had drafted a couple of, actually 1 year back. Yes, it will all take a little bit of step back I'll actually summarize then that are in a really, really, as I said, unprecedented, unforeseen, and unwelcome situation. But yes, the whole world is in it together, and I find some quick solution. I mean, I'm just hoping and saying that the world does find a solution to, of course, the pharmaceutical research. I don't want to comment on that in terms of the what's happening. Yes, what we can do, we'll have to live take all the safe precautions and try to maximize and take this as an opportunity to see how we can emerge. We come out of this crisis. Even in terms of tree level, Honorable Prime Minister has announced Atmanirbhar Bharat Abhiyan. We should definitely make us more self-reliant. We even started to become more self-reliant. And that's why you see the point I mentioned about import substitution. So that we will try to become more and more self-reliant and try to localize as much as we can, which is so this is what we tried to do. And now I'll open up for any questions that you would have. And thank you once again for listening patiently to a little long presentation this time. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a star and one on telephone. If you wish to remove yourself, press star and two. Request to use hand for asking a question. Ladies and gentlemen, we will wait for a moment while the question is sent. The first question, line of Ankit from Axis Securities. Please go ahead.
Hi, good afternoon, sir. Hope everything is safe at your side. My first question is related to the commodity benefit that you've seen in this quarter. How much of it is operational efficiency and how much of it to the material benefit, the cost benefit have you seen?
Thanks for your question. So, as I mentioned, it's a mix, but I would still say that it's largely due to efforts that we did. We did by several levers cost reduction. The RMC happens to be the biggest part. So when we started this cost cutting initiative, which we codenamed as CORE, cost reduction, standing CORE meaning CORE, cost reduction. We the month of August, we tried to attack all big items, in RMC being one and power being one, in terms of our cash flow and inventories. So in terms of RMC, again, within that, we have taken several actions. One was, one important keyword is the VAV, which is value engineering and value analysis, where we are able to design the product by doing a whole lot of testing and validation. It takes time. It can't happen, let's say in a month's time. Also, some of these VAV exercises were actually kicked off even earlier, and it took 6 months to a year to come to fruition. We also, in some cases, have to take approval of the customer with the product change. But we again here, I must say, because of the robust R&D and testing and validation in our premises, we're able to do it a little bit faster. This was one of the key levers. Then yes, we employed a bit of e-auctioning, or you have the reverse process or online sourcing platform. We use that wherever we could. But all I can say, we employed the zero-based costing approach, where we revisited fundamentals of each part. There is, of course, a bit of alternate sourcing too. And yes, and then there is a downside. Because commodities, we have a back arrangement with customers, which helps us when commodities go up, and obviously when it's times when commodities goes down, we have to pass it to customers. So I would say efforts have been due to removing actual and true cost from the system.
Of 230 this movement, you're saying the majority would be to operational efficiencies that you just highlighted.
This is right.
Okay. And my second question was related to the demand front. What have you seen breaks of the OEMs about there? They have also started launch last and what has been the 1.5 months for you as April and May in terms of production, in terms of dispatches or extra color on that?
Yeah, as I said, the OEMs are yet, there are some OEMs which are yet to start production. They have opened the facilities. They are, doing the precautions and all the, new norm implementation. So again, very few have actually started. So it's still early days. I think actually only 1 week of production, 1 week of production that they've had. This week onwards, we'll see some movement. Yes, we have got follow-ups from many of the customers, especially I must say in passenger car and two-wheelers. We have definitely got follow-ups. Commercial vehicle is a little slow out of the block.
Okay. And the fixed plan for this year, any and what is the head on?
So, just to give you a little longer answer, we have actually classified every single project into what is required for statutory compliance and what is required for fulfilling our customers' commitment. Anything which is not in the first two categories has been deferred so far. Usually we, do in the range of 50 odd crores, and this year also we've done in that similar range. It's difficult right now to talk about what kind of projects we would entail, but largely what is lying in CWIP as a year, that will definitely get capable. And over and above, we will be looking at a very small number.
Okay. Congratulations. Improvement in the presentation is really helpful for us.
Thank you. A reminder, please limit questions to 4 participants. Should you have any follow-up, please join please. Next question from the line of Aman Rathi, Morgan Stanley. Please go ahead.
Thank you, sir, for the opportunity. So, my first question is related to the operating expenses have reduced. So, with respect to your own operating, have anything reduction you have seen in, let's say, transportation side, or what actions are taking after COVID to reduce the transportation logistics cost?
Actually, if you're talking of after COVID, again, it's too early. But during these days of lockdown, we actually had, as I said, very exhaustive reviews on what we can do to reduce cost, both in variable and fixed overheads. I'm not talking about raw material, but in terms of variable fixed overheads, and also how can we improve manpower productivity. Coming to transport, the specific question of yours, while it does not form a very big part of our expense, we did address it under our cost reduction program, which I mentioned we kicked off in the month of August, and we could get some savings from this cost reduction project. After COVID, right now it's we are actually paying a premium. To be honest, we are actually paying a premium because there are limited transports available, there are limited drivers available. So, if you want to get dispatch clear, you actually have to pay a little bit of premium to get things moving. So, I think not right situation for us to guess as to how it will pan out. But going forward, our focus remains on how can we reduce the per unit transportation cost.
And my question is, of course, certain but based on revised business plan that company would have developed for the year, how do you see demand coming in for the quarter or for the next year? If you could give some numbers to it.
As you rightly said, it's really I'll share with you. April and May is practically a washout, as you can well guess. We had practically zero sales in April. In May, though it's picking up, up, but at a very, very slow rate. So you can assume April, May is gone. And in June, well, I don't expect things to come back to even 50 levels because, while even if we have an intention to do so, the whole supply chain has to, start from a 2-month complete closure. So that will have its own challenges. Secondly, God forbid if there's a COVID and you really cannot do this aspect. Any of the entire chain, not only, let's say, at our level or at the customer level, or can be at tier 2, tier 3 level, the whole chain will snap. We'll have an issue where, the plant has to shut down for 2 months, whichever plant there is a case. That rule is being somewhat considered by the authorities, but as now it's challenging. So there might be a situation where we'll be seeing a little start and stop kind of functioning. Is my guess. June also will not be very good. But going forward, we see things are likely to pick up after the festive season. At least the pointers are that the monsoon is going to be normal. There will be a huge demand, increased mobility, which all of you are seeing. Over 60% of people in India still want to buy a car. They want to actually stop using shared mobility and public transport. They might shift to basic way of commuting, which is two-wheelers and a car, which is more at starting level, which is either best so kind of a car. So this augurs well for demand, but it's really, really very difficult for us to guess. But we could be seeing. If you're we should be seeing anything, let's say about % down to last year.
Okay. Thank you.
Yeah, thank you. This question is from the line of Himanshu from PGIM. Please go ahead.
Yeah, hello. I have a question. We have been working on growing exports for last many years, but still the contribution is very small in comparison to other auto industries if you look at it. What are the reasons for that, or what are the challenges in exports? Throw some light on export breakup and how has your strategy evolved over a period of time, and what's the future like on it?
Yeah, thanks. Very valid question. We have been working on exports for several years. And firstly, I have to admit that we estimated efforts for switching over or a suspension. And when I'm talking of this, I'm talking of the OEM market. So OEMs to switch over suspension, while in inside it's still not easy, but it's, I must say, moderately difficult. But overseas, switching over a suspension is a very, very difficult commodity. Because suspension play a very important role in the scheme of things. Secondly, the development cost and the testing costs are very high and very prohibitive. So they take decision only after with careful consideration, and then it has the cost which they incur. So these are two learnings that we thought we'd see, but so we have realized that it takes a longer time. The cycle could be almost 5 years. It's as long as that. And in terms of two-wheelers, India is the biggest market. So, the export opportunities are even limited, right? And all those have well-established supply chains in their own markets. So we had focused on commercial vehicles, and that's where we got some breakthroughs. As I mentioned, Isuzu, we got a breakthrough, but their volumes are down. We have got a breakthrough because this is a European premium truck manufacturer, a marquee label, and they are a part of a larger group car. With this, of course, they deliver this flawlessly. We we would open up more exports now. It takes time for you to open up, but once it opens up, I'm sure the things might be faster. Second, in terms of passenger car, again the same story. It's the cycle time there is even longer, even tougher. So again, there we have got a big in Russia. We had already done small based on the stuff we got this order. So one thing will lead to another. It will take some time. Thirdly, some of the orders had. One big order that had was Iran. It was almost 40-50 crore annum steadily growing, and what happened to what's happened to that market. So while our relation remains, this remains as only source, but that demand has really gone, and that instantly got converted to local buying, because what Renault decided is they will consolidate all purchases in India and export it. So from exports, it became deemed exports for us, while as a market, it's still an export market, but we get in Indian rupees. So all this has created a bit of I must say below expectation performance in exports. But however, I am now bullish that time that we needed breakthrough, we have done that. We have got the breakthroughs in these two big names, brands, DAF and Volkswagen. We hope we should improve. And of course now we have COVID, so I don't want to comment on that. But despite COVID, we have built samples, we have shipped samples, and ensure that we don't miss any dates for these days.
Yeah, and one more question. On the replacement business, one of the business is small for us. There can be two reasons for it. Either the product requires no maintenance or fixes, or organizing a very large portion of business. What would be the reason in our case and the aftermarket business? And we have in the annual many times stated that the aftermarket export is also an opportunity for us, and we are working on it. Can you elaborate on these key aspects of the aftermarket segment?
Again, relevant question. Our aftermarket is only 13% of turnover. Being the leader, undisputed leader in the market, so you can see clearly that the Indian customer still does not what is the shock absorber as frequent as one should be doing. We trying to change that mindset of people. And second part is you have to put it as a total of aftermarket and ES, which is OE spares. So the OE spares is also very from OEMs. There's a very good revenue and at very good margins from them. So all OEMs have done this very aggressively over the past 2-3 years, particularly. So add that to this pure aftermarket that we do, figure will be higher. With that, I forgot to mention on the exports aftermarket potential when I answered you on the first part of exports. Yes, there is potential, and our exports aftermarket growth has been very good. We are posting almost 35% growth year on year in aftermarket exports for the past several years on a small base. We definitely want to unlock this possibility. Here again is a high variety, low volume business. So you have to develop many parts. So what we decided is we will tie up with some private labels and try to address it to the private labels, so that we try to have a lesser variety. But yes, the growth rate for aftermarket exports is definitely continue on this effort in terms of increasing our aftermarket exports.
One last question.
Mr. Himanshu,
I'll join that.
line of Finance. Please go ahead.
Hi, sir. Thank you for the opportunity. I have two questions. First one is to the you have in your presentation highlighted the various safety and hygiene initiatives in regards to current situation. Could you highlight what could be the impact of such initiatives that could be there on our overall costs take the time we have to continue with these initiatives?
Yes, there is. As of now, there is an impact. We are at the same, but can only say that like the mask. We are buy this mask and supply. So when we started out buying, the price was X. Today that price is half of that X. We've already used it significantly, and I'm sure it will come down further. While the impact is high, it is not really something that we cannot do. The second impact is in terms of say maintaining distancing will be a because of shift timings. Yes, you have to stagger shift timing. You have to stagger people. To that extent, there could be, but I'm sure we'll find our ways. We already found some possible. This is, as I said, this is new normal. The impact for the time being, but I'm sure we'll overcome that impact in max month, 2 months time. To assess and put a figure right.
Understood. And the second point is with regards to the inventory. Within that system right now, how would you rate the overall inventory of parts? Just have to understand that as production of vehicles starts in, will it have an immediate impact of demand for you as well, or is there slightly higher than normal level of inventory in the system?
Currently, we are holding 31 days of inventory, and as you would have presumed, the month of March, since we had a certain stock, we have increased some amount of inventory, both for progress as well as finished goods. So, given the kind of volumes that we are seeing right now, we have to be safe in terms of having what we need in terms of reasonable coverage of number of days. Again, from each part, and on an overall level, we are looking at. And again, here, this was again, as I mentioned, one of our key areas to release cash when we get to the cost control exercise, and we were able to use inventory, in excess of almost 25 crores, and we released cash in the system. We were able to do that, and yes, now COVID has happened. So, I think the team is energized and enthused with the fruits that we saw by pulling inventory. It's temporarily the sales start in a situation where we'll have high inventory. I'm sure all of us are expected to this new way of having a lean inventory. But
thank you so much.
Thank you. Reminder to the participants. The next question is from the line of Arun Agarwal, Securities. Please go ahead.
Thanks for the opportunity, sir. So my first question is on the inventory part. As you mentioned, 15% of our inventory is imported, and China will make that. So now during this entire COVID situation, see any supply chain disruption, wherein you were in from China and some situation wherein you have to look for market places for any localized parts or something like that?
No, we did not have that situation at all. China impact happened roughly in the month of January, and because we had the lunar holidays, we had anyway done a stocking up of our parts. It was a planned stock that we did because of the holidays. So because of that, we did not face any issues, and once China started resuming slowly, we were able to import parts, and we in fact did not leave any kind of stoppage or even a close call for that matter. We had to do an air freight which was done at the cost of the customer. That's the only that we have seen some premium freight. As I said, fully compensated by customer. But going forward, what we have done this our own way of Atmanirbharta, for self-reliance, and we are seeing how we can entire supply chain in India itself. That is a very, very clear and conscious decision, and we have made much progress on that already.
All right. The second question is on the automation. Automation is something that we keep doing every year. But do you think now post-COVID that the automation could become, maybe the problems that come in? So automation increase spending.
Arun, again, automation has been and is a big part of our drive. But last year also we did several automations. We in fact, we are the only manufacturer possibly who has 5 full-fledged robot lines, each having 4 or 5 robots in each line, and that has been our continuous area because one improves productivity. Two, more than anything, in my view, improves quality. That is the biggest advantage that we get by doing automation. So we will continue. While Rishi mentioned that we are controlling the capex, we have to conserve cash flow. Yeah. But I can tell you that for automation, where needed, where it is a clear payback, every automation that we do is done with that business case analysis. Is justified and do with after a process. But where that is really good, we will continue with doing order. Will clear long-term benefit. That will happen. Coming to labor issues, well, our unions, we have unions in plants only, the 7 plants. Both have been very cooperative, and well, they just started commencing work and started coming in a small number, the factory. But I don't see a challenge on that front from our labor team. There's a very good relation that we have on that front.
All right. I'll try to get some more questions.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
So, questions for balance sheet that you have. So the largely, you have video which is one of the top 5 players, right? And which also is you for acquisition. So in times, have any acquisition for us or any evolving?
Yes, Shashank, glad you asked that question. So we, as I mentioned here, we were open to looking at acquisition, and we were actively involved in scanning and zeroing on some opportunities, and that exercise goes on. I mean, there is absolutely no going back on that. We continue to look at possible. In fact, if I may add, in the current times, actually we are going also to look for any opportunities. So that focus remains, and we are not deviating from that strategy at all.
So any development you could share with us?
Well, no, not as of now. All I can say is we had, kind of zeroed in on a few options, but when this COVID happened, I don't want to sound like for everything the reason is COVID. It's been 2 months too long. It happened at a time when it was the year end. So, right now I don't have a share of any development as such, but all I can say is we are surely aggressively looking at options.
Just, earlier call you mentioned that the saving percent for this year. So, within this estimate, quarter's sales 9% weak plus demand, and two-wheeler is on a better pace given mobility. So any thoughts, sir, on the FY21 sales line?
Yeah, see, like I said, April, May is gone, right? So, away about 2 months out of the whole, right? That's away about, maybe about 7% gone out of the system, which will not come back. Let's call it difficult. Even June, it'll a lot of time for OEs to ramp up. So what I shared is, general. This is again not only my view, but overall industry also shares the same view. Things will not take unless there is a vaccine or a drug that will help mitigate this coronavirus. I don't think once you have that drug in place, things will really come back with a bang. No doubt about that. But right now the visibility is low, and we'll have to go by what we have. So as an industry also we feel will take time. And you also saw that unfortunately even in the financial measures taken in terms of spurt demand, I don't see much. It will take time. So it's a little conservative maybe, but the important thing is if you build that on conservatism, you rein in costs also. That helps you, to actually be in a better position if and when things get back strongly.
Okay. Just one last thing.
Sorry. The next question is from the line from OHM Group. Please go ahead.
Hi. Thank you for the opportunity. I hope all of your end. Drop in sales, you saw 10% drop in sales in FY, and there was some margin drop as well. Regular 9% come down to 7%. We see margin, of course, you've seen some cost-cutting improvements coming up in the last quarter. Where would I see margin then? Because the operating leverage is probably washed out.
Well, I said, we are working on, building a scenario. We're actually not a scenario. We're working on several scenarios. That's right time scenarios, and also to see that how we can rein in costs. It's again too early for me to comment on what kind of margins will there. Surely, it is going to be a huge strain on all of us. It's not us that we will out the entire industry. We'll have to find ways of how to ensure in margins. It's only for us to comment in any way. We don't not give guidance in terms of margins. All I can say is the actions are very well in place, at least planned. Ensure that we continue our aggressive cost exercise.
More or less, what a couple of months ago, are they in place now, or you still have a lot more to do?
Absolutely. See, on the raw material front, what we did is in place. Check. Some of the things happen only in the last year. So that benefit we will get full year now, right? So some of the advantages we'll reap for the full year now. But yeah, the first 2 months, we have all had idle factories. We have to pay all of them as government mandated. We are doing definitely to employees, the contractors, and that's certainly going to have a big impact for all of us.
Yes, sir. Thank you and all the very best.
Yeah, thank you.
Thank you. This question is from Sriram from People. Please go ahead.
Yeah, hi sir. Thanks for the opportunity, sir. Some presentation which has talked about the different share in two-wheelers and 15% share in cars. Can you indicate what was the share 3 years ago, and who is the top customers for you in two-wheeler space?
I think that Shyam is there in the presentation in terms of two-wheeler customers. So we have Bajaj, Yamaha, and TVS. These are the top 3 customers. Our market share now is 5%. It used around 32% I would say 3-4 years back. Definitely a market share in two-wheelers. Passenger car, our share was definitely higher. We had 20% share, so that has gone down. Combination of reasons, which I also mentioned, which is one, we have lost platform because the WagonR, the new WagonR. Second is some of the models which are doing well have made obsolete new safety norms. I'm talking of Maruti Omni, to the volume product, and again, products that we are in, where we are single source, let's say the Volkswagen or let's say the Nano, which completely got zero volumes. So this is also a play in the market that besides your share. Unfortunately, we have been at the wrong end of it. Our passenger car, we have clear efforts in terms of improving our quality, and we have been winning awards, winning recognitions from customers. It's translating into winning new businesses. Volkswagen platform, which was opened up for everybody, we did manage to retain it completely. Is with us. Maruti Espresso we already got. We are in discussions for another new model in advanced stages, which very likely, hopefully the next call I'll be able to share development on that. So our efforts are on to improve passenger car market. Yes.
Thank you.
Thank you. Next question is from line of Rajesh Chetia from Capital. Please go ahead.
Thanks. So just wanted to, and with regards to new products development for OEMs, so is it like collaborative effort, us and the OEMs, or is it like proactive from our side and their side? How does it work?
Well, it's actually a mix of both. Collaborative in the sense, yes, when you develop a new product, we have closely work with their engineering to ensure product. It's not standard products. Each has its own requirements, right from dimension and fitment, right characteristics, comfort, and the overall control and ride handling capabilities. So each will be different. So we have to tune the product to the need of the specific customer. To that extent, it's completely collaborative. Why I said it's also a proactive thing, we have to continuously work on, new technologies, lightweighting. Like we have worked on lightweighting, we have worked on, semi-adaptation. Keep working on this parallelly, so be able to offer customer, and they know you have some products in case they need. How much of it gets translated to actual demand is a different question, but you certainly have to keep showing that you are working actually on bringing in new technologies, on lightweighting, on environmentally more products, on more reliable products, to the OEM. Which, as I said, it's a mix of both.
Understood. Other question is on the competitive landscape for segments we are into. Who are the major competitors? Two-wheeler, cars, and series.
So in two-wheelers, of course, endurance technologies and Munjal Showa. These are the main ones. In addition, you have Showa India, which is a fully Showa-owned city. And you have KYB in Chennai. There's only one plant. And in terms of passenger car, Tenneco is the market leader. Probably a very big name as well. They're the market leader in the passenger cars. Munjal Showa does make very limited passenger cars. They make almost 90% less is two-wheelers. They do supply to being part of a Showa company. They have a tie-up with Honda cars. So naturally, they supply to Honda and a little bit to Maruti. So in addition to Tenneco and Munjal Showa, I would say there are not any more in passenger cars. And in commercial vehicle, practically.
Yeah, that's. And so just to follow up on this, in two, does like these three players that you mentioned would comprise majority of the market, including us?
So yes, actually, three of us comprise the majority. Yeah.
Okay, and similar will be the case passenger cars, like these two, like who will be the largest?
Yeah, Tenek will be largest. Next would be us, and next would be Yashova.
Okay. Okay, sir. Thank you so much. Thank you. Thank you. The next line of B from EM Concall Advisors. Please go ahead.
Yeah, thanks, Manoj. Appreciate all the insights. There's two broad questions that I have. In terms of cost side, what are you doing, and in terms of cash side, how much capital do you have marked out just to make sure time to this time if it's worse than what you have? And the second question is really, if you were to look out into your segments in the market from a 12-18 month standpoint, and you were to expect sort of normalization in the environment, what would you say would be the key structural changes that have played out in this environment, or how would business be different?
Yeah, thanks. Thanks, Jitu. So just to on the cash side, as I shared with you, I mean, from our balance sheet, make out that our efforts have yielded good results. Continue, as I said, that with the team also it's become a kind of a new way of working. That everybody is very, very conscious about cash flows. So that is the good part. So we have worked on the scenario that if things in a worse manner, we've killed cash flow for month on month. As I said, we have done scenario planning. We have built a couple of scenarios. For each scenario, Rishi and team have put together cash flow in all aspects of course, sales and then costs we have to incur, on both fronts, and capex that we have to, incur. Done that, we have done a cash analysis, and I must say, we are very well done that aspect. Coming to your second question on 12 to 18 months, you said would be a structural. Is that what you said?
So the question was that I'm assuming you're assuming that 12 or 18 months that's normal. In that normal environment, 12 or 18 months from now, what has structurally changed for business? As kind of crystal ball gaze on that one.
For business, in a sense, for our business or for a customer's business? Which
no, for your business, obviously for your business, that's a question of what's happening to your customers of your business as well, right?
We talk about our business. I mean, I certainly feel like I share the view that in 12 months, that I was telling that while taking a guess of and how much down is very difficult moment. But yeah, let's say in 12 months' time, we'll get more clear, and I feel should on. And when it bounces back, it really will bounce back very, very well. Is what my hope and expectation is. Once we get to that stage, Gabriel as a company, we will definitely be far more leaner. I mean, that I can be very fully say and secure in terms of all aspects of business, right from raw material cost to our manpower cost to our fixed and variable to our cash flow control. So on all aspects, we see that we will be a much more lean and agile company.
Yeah, but so Manoj, what I was trying to also understand is, are there segments of the market that disappeared? Are there segments of the market that will be brand new? And are there any big trends that you prophesy about?
No, not really, because the short-term impact will be that there will be a shift from shared mobility, public transport to personal mobility, bound to happen. And as the world starts to either get used to this new normal, there is a vaccine. There was the whole coronavirus or some medication, then even this part will definitely come back. So I see short term, yes, commercial vehicle and let's say public transport, I mean, that part, and the Ubers and Olas, the shared mobility part, that will be hit. I don't see that as a structural change. Because, I maintain it is maybe for the short term or mid, it will definitely come back forward.
Thanks, sir. Stay well and keep
Thanks.
Thank you. The next question is from equity advisors. Please go ahead.
Thank you for your oversight. Two remarkable things I noticed as a washout quarter. One is expanding margin and two is import substitution. I want to know how much you have lost for lack of operating leverage last quarter. And I will come back to the second question.
This is just clarify that I didn't get that.
You didn't have a full operating leverage in last quarter, is that correct?
Even in which quarter you're talking of Q4 of 19?
Yeah.
Yes. Yeah.
So you would lose because of that. Is that correct?
Yes. Because it was the lowest cut. We had only 420 odd crores of sale, where we normally do 510 crores of sale.
Okay. Is it possible to quantify the loss in on operating margin level? How much you would have lost because of that?
Well, I mean, in terms of a contribution, it's about 16%. So that's a straight loss when you don't have that, when the top line vanishes.
Okay. And second is, very interesting, as you said earlier. How are you able to manage this complete import substitution, that also from China? Can you, in terms of product process, in the timeline for this?
Yeah. So, the China imports, let me share that, China imports, we had started about, I must say, 10 years back. So at that point of time, China was definitely a very, very attractive proposition in terms of cost. We were not sure at that point of time in terms of quality, but surprisingly, we found that, the quality also they were able to meet, and in fact, they were able to meet the Indian levels. I can definitely say that. They were doing excellent products. We had set up an office in China. We disbanded. Luckily for us, we had taken this decision as part of our cost containment measures, and we decided to close our China office, which had 3 and the rented space. We shut down the office, and by December 31st, just before Corona, all employees were back safely in India. So that was, in a way, a good thing that happened. But anyway, what I'm saying is we shut down the office because we had said going forward, we are going to use the art in China. There are a couple of things. There are many commodities that we buy from China, right from front fork, out tubes, inner tubes, to piston rods, to seals, and some sister parts. So what we've done is already the piston rod and some of the sinter parts and some of the brackets, we've completely, 100% switched over to Indian manufacturers. How we are able to do that is by, selecting suppliers carefully. Also, let's say in the last 3-4 years, we were not able to do it because there were not many capable suppliers and strong suppliers. And now, we have seen that there are some suppliers in the tier 2 days able to take the step of import substitution. Biggest commodity is casting, where we have already identified one supplier and we have gone ahead and he will in fact give the first samples in the month of September. That will remove a big chunk of imports. For the balance also we have gone up some plans and it takes time. One is the investment part. First is the additional supplier, second is the investment part, third is a customer approval. We also have change of supplier. All time. So however well intentioned we are, we cannot beat this timeline. So that's why I said we will try to reduce it almost as low as possible. It can't be zero. There might be some commodities that are, better bought China. But when we do that, we are selecting that very carefully. The ones which are not too logistically unfriendly, those are the parts we will continue to source from China and offer as a good quality and a good reliability. Those will continue from China. Otherwise, all the other parts, say 2 years, we will be able to completely move away from.
I would assume this would be as competitive as China. Is that the scale that makes competitive China? How is it if suppliers would think, can bring down to that level of cost?
Yeah, I've mentioned one thing is that Mr. Rao, right? Sadanand, yeah. Okay. Sadanand Shetty, no?
Yes.
Okay. Yeah, Mr. Sadanand. So I forgot to mention that when we did this, sourcing from China about 8-10 years back, it was a compelling decision when it cost. We had actually huge savings. You know what has happened to the dollar, number one. Number two, the import is got imposed and increased last year by 5%. All this together has actually made those while able to get some reductions from suppliers, but we are obviously not able to offset that thing because the dollar has grown significantly in the last 10 years. Now, what is happening is actually the Indian suppliers are more competitive on a standard cost basis. So the situation is, to that extent, simpler for us. We had to wait for the selection process because it's a very key decision. We don't want to, just go to a small supplier who is not end up in some issues. So we have to do it carefully and gradually.
The timeline you would say, just a follow-up question. You say it's 12-13 months for this?
Yes.
Thank you. I'll join the queue.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, take the last from lineup and Balakrishnan. Captain, please go ahead.
Hello?
Yes.
For all your detailed comments have been answered. Sir, just wanted to ask on this transition to electric vehicles that is happening, and I see in your presentation you also have customers that. How do you see that impacting us as your customers, and how do you, from an overall transition towards EV, how do we see us getting impacted positively or negatively? If you could share some points.
Yeah, Mr. Vagishan, so brought the point of EV. So EV transition, as you may have definitely seen and read, that it is very likely to happen in a larger way in 2- and 3-wheeler space. Passenger car, it will be much slower. Commercial vehicle will be quite positive. That's how India stands today. Even if it's global view, before COVID. Now, how COVID changes the whole scenario, I'll come to later. Even if global view, the best estimate is, simple 30%. But this is the kind of transition that even globally, I must say, the rest of them, it won't be greater than 3% by 2030. So, firstly, the ICT is not going anywhere. It will really continue. Now, the crude oil prices are prevailing, so it has not affected it. In fact, our have gone up, so fuel. But globally, the prices have crashed in terms of crude oil. That changes the equation for EV journey completely. Now, for the EVs to still be as compelling a commercial economic proposition, become that much difficult. So this may, delay EV transition time globally. Coming to India, we thought we should focus on the 2- and 3-wheeler part. So we have addressed in a very focused manner, meeting all the customers, giving them products that they want, trying to products where we also can, share some of the lightweight goods. So we've been able to get business from all the top EV two-wheelers and three-wheelers both. We are very well entrenched with them and continue to do so. However, having said that, still a very, very small part, and it will take time because while the Indian customer, biggest issue playing in their mind is range anxiety. Whatever I've even talked to customers, there is still a huge question mark about range anxiety. Till that gets solved, people may still not go to EV very quickly. I'm not even talking the infrastructure part. It will be a slow change in the mid, let's say even by 2025. I don't see that going beyond 20%.
Got it. Just one follow-up on this. So even let's say even this, I understand, and I also have read the same kind of projection. But should there be a transition, or should there be a transition which is more skewed higher than that? As a ancillary, we do have the capability to transition or to provide the necessary products. I mean, product that we manufacture largely for that for EV two-wheelers and three-wheelers.
Absolutely. So, Mr. Balakrishnan, that to share that our product is, engine agnostic in a sense. Even if it's a hydrogen-powered fuel cell vehicle or a EV or a hybrid or a fully IC engine, the shock absorbers will remain. They will not go anywhere, and they remain practically the same. So it's not at all a challenge for us to meet any kind of demand on that front.
Sure, sir. Very much, and this is very helpful. All the very best.
Thank you. Thank you. Thank you. Thank you.
Thank you. I'll hand the conference over to Manoj Balakar for closing comments.
Thank you all for those questions. Firstly, I was not able to answer some of because the situation is so very fluid. I'm sure when we ask for volume outlook from the customers, they are not even able to give me a week's outlook. So it's really difficult for a longer term call. But being what we can do in our own way is build scenarios, which is what we have done. We've done scenario planning. So will it be 20% low, 30% low, 40% low? There are base figures floating around. What is this? What we can do is one, start living the new way, start living in a new norm, take precautions, and once we do that, how can we maximize efficiencies in this new scenario is what will be which we have started doing. And secondly, of course, it's a time for all of us to be as cost conscious as possible. So we are clearly seeing this as an opportunity to remove all the waste from the system. And in a way, yes, I'm sure we'll emerge stronger from this whenever this goes away. In the time, it's really challenging. I must say, all our customers have also been supporting very well in terms of even let's say cash flows. They have been supporting us with their payment terms, and in turn has been very proactive because we realize tier 2, tier 3 form a very important part of the whole chain, and we have extended whatever support we can in our own way to our partners, and we feel continuing. With that, I hope and pray that we come out of this situation as early as possible, and that all of you, your families and near and dear ones, stay home and follow all the guidelines and protocols and take no risk. With that, thank you once again for patiently listening for our presentation and our response, and for all the inputs you have always given. Thank you.